Hello everyone, welcome back to this channel. In today's video, we are going to discuss an important topic in behavioral accounting, which is ethics and behavioral aspects in accounting. Accounting is not only about numbers and financial reports, but also about human behavior, honesty, and responsibility. Behind every financial report, there is always a human who makes decisions, and those decisions can be influenced by emotions, pressure, and personal interests. That's why understanding ethics and behavior is very important, especially for future accountants and business professionals. Let's start with ethics in accounting. Ethics refers to a set of moral principles that guide a person's actions. In accounting, ethics ensures that financial information is prepared in a way that is honest, transparent, and reliable. Accountants have a big responsibility because their reports are used by many parties, such as managers, investors, creditors, and even the government. If the information is not accurate or manipulated, it can lead to wrong decisions and serious consequences. Therefore, an accountant must always uphold ethical values in every situation. Next, we talk about behavioral aspects in accounting. Behavioral accounting studies how human behavior affects accounting processes and decision-making. Even though accounting uses data and numbers, the people behind it are still influenced by psychological factors. For example, an accountant may face pressure from management to make the company's performance look better than it actually is. This situation creates a conflict between professional ethics and external pressure. Other factors that influence behavior include emotions, personal motivation, bias, and organizational culture. These factors can affect how decisions are made. For example, an accountant may feel pressured to adjust financial data to meet company targets. This creates a conflict between ethical responsibility and external demands. If not handled properly, these behavioral influences can reduce the quality and reliability of accounting information. Now let's look at the key ethical principles in accounting. First, integrity, which means being honest and straightforward in all professional activities. Second, objectivity, which means making decisions without bias or personal interest. Third, confidentiality, which means protecting sensitive information and not misusing it. Fourth, professional competence and due care, which means maintaining knowledge and performing work carefully according to standards. In real-life situations, accountants often face ethical dilemmas. For example, a manager might ask an accountant to delay recording expenses so the profit appears higher. In this situation, the accountant must decide whether to follow the request or uphold ethical standards. Choosing ethics may be difficult, but it is necessary to maintain trust and professionalism. So, what is the relationship between ethics and behavior? Ethics provides the guidelines or standards, while behavior is the actual action taken by individuals. If someone has strong ethical values, their behavior will reflect honesty, responsibility, and professionalism. However, if ethical awareness is weak, behavior may lead to unethical actions such as manipulating financial data, hiding important information, or committing fraud. In behavioral accounting, it is important to understand that decisions are not only influenced by data, but also by human behavior and psychological factors. That is why organizations need to create an environment that supports ethical behavior. In conclusion, ethics and behavioral aspects are very important and closely related in accounting. Ethics serves as a moral foundation, while behavior shows how those values are applied in real-world situations. Understanding both aspects helps ensure that accounting information is accurate, fair, transparent, and trustworthy. A professional accountant is not only skilled in numbers, but also has strong integrity, ethical awareness, and the ability to control their behavior under pressure. Because in the world of accounting, trust and credibility are everything. Thank you so much for watching this video. If you found this explanation helpful, don't forget to like, comment, and subscribe. See you in the next video.